Hello, in today's videos you will learn what is going on with the stock market. Why the stock market keeps plunging. The financial markets are coming to grips with the Federal Reserve's policy change, as geopolitical factors complicate the outlook for the global economy. Head-spinning volatility. The S&P 500 has now registered 5 consecutive weekly declines, its longest streak of losses since June 2011. Stocks rallied earlier last week, before suffering their largest single-day drop since the start of the pandemic on Thursday. Futures point to another drop in U.S. stocks this morning. What's driving the wild swings? The financial markets are coming to grips with a stunning policy change by the Federal Reserve. Markets have become so accustomed to the Fed's loose monetary policy of the past 2 decades that investors don't know how to react now that the central bank is pulling back and trying to slow the economy. This is a very big change, and the markets are having trouble processing it. Adding to the uncertainty are continued lockdowns in China, surging inflation, supply constraints and a spike in oil prices. That has complicated the outlook for the global economy, though some Wall Street forecasters remain optimistic. Goldman Sachs said that it forecasts a recovery in major equity indexes. The tightening in U.S. financial conditions has somewhat rebalanced the risks to the Fed's mandate and potentially set the stage for a stabilization in the financial market environment. Tech stocks and crypto prices are falling again. Bitcoin this morning hit its lowest level since July 2021. Tech companies, both global powerhouses and startups, are also feeling the pain. Share prices for Netflix, Meta and Peloton are all down substantially this year. Some strategists are saying prices could continue to fall until they land back where they were before the pandemic. For tech stocks, that would be a further 25% drop. For crypto, it could be a plunge of more than 60%. With some tech companies freezing hiring or laying off employees, investors are split. Some see a temporary slowdown, while others say it is a sign of a deeper slump to come, the Wall Street Journal reports. Elon Musk, on the other hand, has told investors that Twitter could quintuple its revenue by 2028. Here's what's happening. G7 leaders pledged to ban or phase out Russian oil. They provided few details, but said the changes would be made in a timely and orderly fashion that allowed members to find alternative supplies. The U.S. also imposed new sanctions against 3 Russian television stations, barred Americans from providing consulting and accounting services to Russians, and sanctioned executives from Gazprombank. Senators may vote on abortion this week. Responding to the leaked draft Supreme Court opinion overturning Roe v. Wade, Senate Majority Leader Chuck Schumer of New York said he would initiate proceedings today for a Wednesday vote on legislation that would codify abortion rights into law, despite clear evidence that the measure lacks support to be enacted. Amazon fires senior managers at a newly unionized warehouse. Insiders characterized the firings as a response to the union victory, the first for an Amazon location. The company, though, said the terminations were the result of an unrelated internal review. Northern Ireland embraces Sinn Féin. Sinn Féin, the main Irish nationalist party, won the most seats in the Northern Ireland Assembly for the first time in elections over the weekend. It was a first for a party that calls for a united Ireland and has ties to the Irish Republican Army, but analysts said the electorate was more focused on economic issues than on sectarian struggles. Uber CEO tells employees that the company will slash spending. Uber will cut spending on marketing and incentives, and make hiring more selective. Khosrowshahi told employees that the market is experiencing a seismic shift, and that the company needs to react. The scientist supply chain. The war in Ukraine could transform the dynamics of the international innovation race. The Biden administration, which is growing impatient with supply chain slowdowns and is antsy about China's tech rise, is angling to attract scientists and tech workers fleeing Russia. Nabbing that talent now would serve 2 significant U.S. needs, robbing Russia of innovators while helping the U.S. compete with China for tech primacy. President Biden says the U.S. needs to up our game. On Friday, Biden told workers at an Ohio metals manufacturer that investing in innovation would improve economic and national security. He urged Congress to pass the Bipartisan Innovation Act, which aims to boost U.S. manufacturing and includes $52 billion for domestic semiconductor production amid a pandemic chip shortage. Getting products faster and cheaper and reliably and outcompeting the rest of the world. That's what it's about, Biden said. The House and Senate will be reconciling differences between their versions of the legislation this week. Russia offers an opportunity to catch up. The Russian Association for Electronic Communications said it expects that about 10% of the industry's workforce, or about 150,000 to 170,000 people, will have fled the country by month's end. The Biden administration hopes to capitalize on the exodus. In a funding proposal to Congress, it has asked to ease visa barriers for Russians with advanced degrees, with a focus on attracting experts in artificial intelligence, cybersecurity, semiconductors and robotics. The US has halved its research investment in the past 30 years. The country now ranks 9th in global R&D investment, down from number 1 3 decades ago. China, on the other hand, has risen to second place, from 8th. And the US risks falling further behind. The biggest areas of concern are quantum computing, fusion power, advanced materials and microelectronics, according to Louis' assessment of the innovation race. Without investment in those areas, the next generation of technology may not be built by companies based in democratic countries. Thank you for watching today's video. Please like, subscribe and comment down below for more finance tips and news.